All right, let's talk about Porsche. We're looking at ticker P911DE, and boy, things are getting interesting. They've got a huge earnings announcement coming up, and you can already feel the tension in the market. So, what is actually going on with one of the most iconic car brands on the planet? So, here's where we're starting the day, 38 euros and 64 cents a share. That's the price tag right before the opening bell. But, that number is just a snapshot in time, and as you're about to see, it's already feeling a bit shaky. And there it is. The stock's already down almost 2% in the pre-market. Now, this is what's so fascinating. The official news isn't even out yet. So it makes you wonder, right? What are investors seeing that's got them so spooked already? Well, it all circles back to one thing, the big earnings report that's dropping on March 11th. And listen, this is not just another quarterly update. This is a huge high-stakes moment that could really define where the stock goes for the rest of the year. All those pre-market jitters, they're all about what might be hiding in that report. Okay, so when Porsche finally pulls back the curtain, what should you and I be looking for? Honestly, it's not really about the profits they just made. The real meat of the story is going to be in their predictions for the future, what we call forward-looking guidance. Are their profit margins getting squeezed? Are they growing? And here's a big one. Are they building more cars than they can sell? That's where you'll find the real clues about Porsche's health. All right, let's pop the hood and take a look at the engine of this company. I'm talking about the fundamental numbers. This is where we get to see the real nuts and bolts of Porsche's valuation and why it's such a complicated but super interesting story right now. First thing you see is the price-to-earnings ratio, the PE. Just think of it like a price tag, and Porsche's is sitting at over 37. Now, that's pretty high. It means investors are shelling out 37 euros for every single euro of profit the company makes. A price tag that steep tells you one thing. Wall Street is expecting some serious growth to make that number make sense. But here's the plot twist. A dividend yield of nearly 6%. That is a huge cash payment that goes directly to shareholders. And it acts as this incredible cushion. Even if the stock price is bouncing all over the place, getting that much cash back can make a lot of investors sleep better at night. And this right here, this shows you where that dividend comes from. A free cash flow yield over 6% tells us that Porsche is an absolute cash-generating machine. We're not talking about accounting profits on a spreadsheet. This is cold, hard cash pouring into the company. Cash they can use for, you guessed it, dividends, new factories, or paying off debt. So when you lay it all out, you see the central puzzle. Based on its earnings, the stock looks pricey. But if you look at its price compared to its sales, it actually looks pretty reasonable. It's this classic tug-of-war between a premium growth story and an old-school value play. And that's exactly what investors are trying to figure out. Okay, so we've looked under the hood at the engine. Now let's look at the car's dashboard. Because in the world of stocks, the technical charts are kind of like your warning lights. And right now, a few of those lights are flashing bright red. Yeah, a quick glance at the chart shows you a few troubling signs. The current stock price has fallen below both its short-term and long-term average prices. That's often a bearish signal. Plus, a few other momentum indicators are also pointing south. Basically, the story the chart is telling us right now is that the path of least resistance is down. So, we've got a mixed bag on the fundamentals and some pretty clear warning signs on the charts. What's the third opinion? Let's bring in the AI models and the Wall Street analysts to see if we can find some kind of consensus here. Mega's AI model went to work, crunched all the data, and it spit out a score of 63.37 out of 100. Let's be honest, that's basically a B grade. It's not a failure, not at all, but it's a long way from an A+. That tells us the AI is seeing the same thing we are. Some real strengths, but also some pretty big weaknesses. And here's the why behind that grade. The AI absolutely loves that cash generation we were just talking about, but it's getting hung up on the profitability picture and, just as importantly, the simple fact that selling expensive luxury cars is a tough business that gets hit hard when the economy slows down. So this really lays out the two potential paths after the earnings come out. In a more conservative, maybe even pessimistic scenario where those margins get squeezed, the stock could easily fall to 34 euros. But if they come out and just blow everyone away with their future guidance, well, then you could see a rally all the way up to 55. That just shows you how much is riding on this single announcement. Okay, so you've got the fundamentals, you've seen the charts, you've heard what the AI thinks. So what do you do with all this information? How do you actually turn this analysis into a strategy? Let's talk about how to navigate the road from here. Well, it really depends on what kind of investor you are, right? If you're in it for the income,
That dividend looks amazing, but you got to remember it won't protect you from a big price drop. If you're an active trader, maybe you're looking at options to make a bet while clearly defining your risk. And if you're a long-term believer in the Porsche brand, you're probably just trying to ignore all this short-term noise and focus on the long-term story about margins and cash flow.
Now, let's be crystal clear. These are model projections, not a guarantee. This is not a crystal ball. But man, you have to pay attention when the AI model spits out a forecast this bearish. It's projecting a potential drop of 18% over the next month alone. It really hammers home the idea that based on the data we have today, the model sees a whole lot of risk ahead. And that all brings us back to the one final multi-billion-dollar question. Is that incredible 6% dividend a reward for being patient and riding out the storm? Or is it actually a warning sign, a high yield designed to lure you in and make you ignore the risks that the market is just now starting to wake up to? That right there is the question on everyone's mind heading into this report.